All right, good afternoon, everyone. Today I thought I'd take an opportunity to review Cycle Day 2. Today is Thursday, April 2nd, 2020. We had a very good Cycle Day 2 morning action. So we want to make sure we review that and see how it unfolded and how our plan was in expectation of a Cycle Day 2. But before we do, again, industry regulations just requires me to at least display our disclaimers and that past performance is not indicative of future results, and this presentation is for educational purposes only. Okay, with that out of the way, we begin each session with a daily trade strategy, right? And as you can see here, everybody has access to this during your trial or if you are a subscriber. So how I write this out is we kind of give you a brief view of the prior session, what happened there, and as it leads into the current session. So as you can see here, yesterday, Wednesday, was a cycle day 1. The price decline, which normally is expected to occur, did materialize, and it went beyond the average decline and slightly beyond the statistical decline as well. So that established a cycle day 1 low. And again, the job of a cycle day 1 is to probe for and establish a new cycle low from which to begin the next cycle rally. So the whole idea of the cycle is that it's cyclic, cycles back and forth over a 3-day period. So coming into today, we're transitioning from a cycle day 1 to a cycle day 2. And as I wrote here, during the Globex session, price had rallied approximately 50% of the target of 25.19. And that on a normal cycle day 2 would be for some level of backing and filling, adjusting in this case for the price decline from the day before. And part of that process, the important part of the process, is in most cases we'll get some sort of a test of the cycle day 1 low. So the market wants to determine whether or not there are sellers below that level, or are the sellers complete. So that's the probing aspect of the cycle, of a cycle day 2. All right. So let's go to the charts here, and we'll show you as it unfolded today, so keeping a few things in mind. Yesterday here as a cycle day 1, so we're looking at the left side of the chart. And what I'm going to do here is actually, what I want to present to you is taking a look at the big picture, having an understanding of what we're looking for the particular cycle day, and then not just enough to see what the big picture is anticipated to be, but then take that understanding, see what actually is unfolding in real time, and then how do we trade it? Because that ultimately we want to drill down to, how do we trade this? What do we look for in order to trade this, to stay in alignment with what the cycle day is unfolding as, and what opportunities can we uncover? So it's really important. It's not just enough to know the theory of it and the structure of it, but ultimately how to trade it. So that's what we'll try to present here, because it turned out to be a very good cycle day 2 morning session so far. All right, so yesterday, cycle day 1, again, the job was to probe for a low, and you can see here on the left chart, we got a low at 24.34 quarter. As I mentioned in the daily trade strategy, the market rallied up a little bit during the overnight. And then as we entered just prior to the cash session, prices sold off aggressively, testing and actually exceeding or violating actually or exceeding the cycle day one low. So at this point, we discussed in our briefing, we had a couple different scenarios that may play out. Naturally, one would be a continuation of the decline, failure to recover above it, and then continue on down to lower violation levels and lower projected levels. The alternate scenario, which ended up playing out, was to recover back above the cycle day one low, retrace some bit, and then continue on to rally. So that was the beginning of the briefing. So clearly, as you can see here, we ended up getting the second scenario, which was the hold, recover back above, and hold. All right, so let's go over to the 5-minute chart here, which is an RTH session chart, regular trading hours, versus the 60-minute, which we have a 24-hour session. And we still have the same levels here. So we have the buy day low or cycle day one low here, all right, at 34.25. Now in this case, we're not seeing the overshoot that we see in the 60-minute simply because it's an RTH. But if you can visualize that there was that overshoot, so if we look at the second scenario that ultimately played out was, all right, so let's just call it, we had the overshoot down here, and then we're looking for a recovery back above the cycle day one low. So as the RTH session began, though it was a little volatile, naturally the openings are, we got our move up to the prior VWAP, found some resistance there, and then price pulled back. All right, that was all during the RTH session. So that's the scenario we're looking for. We're looking for price to come back, retest the cycle day one low. Doesn't have to come back and touch it. The market's going to determine what it wants to do, regardless of what we think it should be doing. But keep in mind, the concept is to stay above the cycle day one low. If the market determines that is what they want to do, and there's no selling on the probes lower, so it probed lower here on the pullback, if there's no additional selling that took place, then the market begins to auction back higher. Okay, and during the morning session, what we were talking about early on is determining whether or not the price action was developing in a more bullish fashion or in a more bearish fashion. And one of the markers that we use will be the opening mid, the opening mid of the session, and the VWAP at the time. Now the VWAP wasn't as useful at that time as the mid, but as long as we said if price stays above the mid, it's bullish. If it can get above the 24.75, 24.80 zone here, so this upper pivot zone from yesterday's RTH session, it would be additionally bullish to the extent that price would then target the 25.1950s. So if you take over here to the left, back over to the left 60-minute chart, you can see this white line, 25.1936, so rounded to 50. And that is the average range on a cycle day 2 as measured from the cycle day 1 low. I'll show you that on the spreadsheet in a moment. So this target is the range projection measured from the cycle day 1 low on a cycle day 2. It also happened to correspond to the Globex overnight high. All right, so as you can clearly see, once price cleared the 5-minute 24, 75, 80 zone, which we discussed live in our room this morning, prices began to accelerate. Now, courtesy of, by the way, of some positive comments related to crude oil, and that of course helped the S&P catch a strong bid as well. Regardless of the catalyst, the structure remained intact of what we were looking for. So when we came in anticipation, we were looking for some backing and filling. We didn't really have a whole lot of time to back and fill here today. The nature of the market's action just didn't allow it, and we had that bullish commentary in crude, and again, market sparked the bid. But notice, right, the potential where the market ended up going. Market ended up going up to those 25-20 levels, which again is the average range projection on a cycle day 2. So as we came in this morning, we had a probe below. The question was acceptance or rejection. We don't know what the answer was to that unless the market had to unfold and show us. So the market showed us that it was accepting, or actually was rejecting the probe below. It was accepting price above the cycle day 1 low, and then ultimately caught a firm bid, and then the potential led up to the range, and that's at the 25-20s. So as we're speaking right now live, prices have pulled back to VWAP, and I mentioned just a short time ago that as long as price holds above VWAP, and also, by the way, it's retesting the breakout point, is it not? 2480 pivot. So it's come back and retested the breakout point, and now prices are being bid up once again as we speak during the midday here, during mid-noon period. So we have a bid, and the prices may continue to move higher at this stage. All right, but the initial objective coming off the cycle day 1 low to the 25-20s has been fulfilled. Now, how do I get that? How do I get that 25-20? Where does that come from? So if we take a look here, at the spreadsheet, and let me clear the drawings. Okay, so if we take a look at the spreadsheet here, if you look at this area here on the left hand side, all right, you'll see 25-19-36, and you'll see there it's a possible high of a cycle day 2. Okay, based upon, if we go all the way over here, based upon the average rally. And what's that average rally distance? So if we come over here to the right, the average rally of 85.11. So how do we get that target? Where does that come from? So we know what the average range or rally target range is, 85 handles. How do we get that 25.19? So we got to go down up here to the left and say where it says the current ES low from the previous. So up here, you can see 24.34 quarter plus, that's the low, plus 85.11 gives us a result of 25.1936. So if price holds above the cycle day one low, 24.34 quarter, the projection rally based upon the average range that occurs on a cycle day two, which is 85 handles, brings price, the initial price target, or the initial objective on a cycle day two to this value here, 25.1950. You can round it to 25.20. All right, just kind of use round numbers, but it fulfilled that particular target. All right, so that's how you get this value here. How do you use the spreadsheet? It's not enough just to say, okay, there's your possible high, but how do I get it? Where does that come from? So I have greater confidence in understanding how these numbers are generated. Again, these are actual observations that have occurred on cycle day two over the past 20 cycles. Okay, down here in the bottom left, we're looking at what's called the recap MA sheet. The recap MA is 23-day cycles, so approximately 60 trading days. And that encompasses all the most recent action. So 85 handles is the average rally range measured from the cycle day one low. The average range observed overall over the past 20 cycles on a cycle day two has been up here in this red, excuse me, 105.71. So roughly 106 handles. Total range. That's the overall range measurement of the day. What we're discussing here is the possible high based upon the average rally, and that's a different calculation than the average range based on a cycle day two, which is 85 handles. Now again, prices now could certainly go much higher, but right now, as of this recording midday during the lunch period, the morning session has fulfilled those objectives. Now prices would need to go above the current high and extend, beyond the current session high, and then reach some further upside objectives. So if you take a look here on the RTH session on the right, the next upside objective here would be, if it clears the current high, the next objective would be here 25.3450, call it, which is the penetration of the prior session's high, daily high. All right, so it would move up. That would be the next projection. And again, if this high as well gets taken out. All right, so right now, as we where currently prices are, we're looking for, and we've already seen support come in on a retest of prior resistance, converting to new support. We have an upward sloping VWAP now. We got a pretty high, volume node area here as well. There's your point of control. So this area is being trafficked quite heavily at the moment. Volume has dropped off significantly as prices are auctioned up into this high. So at the moment, there's not a lot of support beyond the current high. When I say support, I'm referring to new buyers, eager buyers, sustained buyers, willing to pay the upper prices and looking for prices to go further. So the probing of the upside, again here, is to probe to see where sellers are. If the market, if there are no real sellers, again, the volume has dropped off a bit, but if there are no developing sellers, the buyers, the bids will still continue to be there. But you can see a little volume notch right here. So they're encountering a little bit of responsive sellers at the moment, around 14.15s. So we'll have to see how actively, we'll have to see how the market handles that. But for right now, the initial objective on a cycle day 2 has been fulfilled, okay, up to the 25.1920 level. Now the question is, which means you don't need to add up 85 to 25.19. So the measurement is from the cycle day 1 low. All right, so just pull out your calculator. 24.34 quarter, right, plus 85 gives you what? 25.19. All right, so that's all. That's it. That's the average rally, okay, at that point. That's the calculation. That's the core calculation. All right, so that has been fulfilled at this point. No need to add beyond that. So coming in this morning, in preparation for today, the question is, if prices hold the cycle day 1 low and begin to, and we get some bullish shift. So let me just show you, let me continue on here, okay, how we can trade this. What do we look for in the shift? So we understand the low, the pullback holds above that cycle day 1 low. Okay, that's great, terrific, but how the heck do I trade it? What do we look for? So I'm going to switch over to the execution chart now. And I've highlighted in red, right? So this is the cycle day 1 low. And this is the excess low. All right, just call it X low for excess. That's the excess low. So that's the probe below, and then the recovery back above. Okay, so now one of the questions is, well, how do we identify if the low's in place, and what do we look for? Okay, so we're looking for a shift from bearish condition to bullish condition on the lower execution chart. So in this case, we're using a 750 tick. And you can see here the ATR lines were initially bearish here, and then they shifted to bullish. So that shift is what we refer to as a structure shift, price structure shift. All right, and we have a little bit of a color background, shift as well to help designate, that bullish change. So at this point, and again, this is right on the opening here, right? Prices shifted to a more bullish posture. Okay, so now a long could have been taken here, but let's just move along here for a moment. Prices did pull back though. Okay, and again, this is part and parcel of what we're actually looking for when we talked about looking for that pullback in price. So price in fact pulled back. We were looking at that on the 5-minute chart there. So if you kind of take a look, consider this on a 5-minute chart. So we had the initial move up off the low, and then we got a pullback in price, which found some level of support around the 45s. So that's your first pullback, following the recovery back above the cycle day one low. So at this point, we could be beginning to plan on looking for a long, and so we get a new shift here. So again, this is a sensitive chart. The 750 is a relatively sensitive chart. So you'll see that the ATRs shifted back to a bearish condition here. But again, we're looking for a pullback, so that's natural for the ATRs to shift that way. What we're looking for is on the pullback at some level to find renewed buyers. So as prices pulled back and tested, these 45s, it found renewed buyers. What we're now looking for is, once this pullback concludes, we're looking for the new shift in the ATRs again. This becomes a more significant shift now. Why? Because the first pullback off the recovery low has concluded. So this bullish shift again back to the greenish background, right, which gives us some visualization. ATR shifts, which are price structure shifts from as we view them. And then now we ended up getting discounts. And again, a discount is a pullback within the context of a new developing up move, standard setup for us. So a discount becomes our initial long trigger or long setup, right, to consider the trade. So again, all the bigger price structure action and what we were looking for to unfold occurred. And then again, drilling down into the execution charts, well, how do I take the understanding of a recovery back above the cycle day one low, and how do we use that to take a trade? So once we have all that structure anticipated in mind, and as it's unfolding, now we're looking for that new development back to the long side, back to the bullish side. As you can see now here, prices continued to not only shift, right, but again, each pullback provided some area within the context of the price structure. So you can see where those arrows are. Those were pullbacks within the developing up move. So these become the zones to initiate longs from, because price structure now has shifted. And by the way, this was before the announcement, positive news regarding crude oil. So price had already shifted to a bullish posture before significant news. And then, as we were speaking of earlier, we were looking for the 2480s, 2475 zone, right, to be the inflection point. So as prices auctioned up into that, got a little reaction, right? So a little sell reaction there, a little sell reaction there, to be expected. But the sell reaction didn't result in a reversal. It just resulted in a pullback in both cases, but within the context of a developing up move. Okay? That's how we want to look to trade these things. We want to take the understanding of how a cycle day unfolds, what's the typical expectation or the normal expectation of a particular cycle day. Once we start understanding the nature of how cycles work, how these particular cycles work, and how we can use the range projections, we have a lot of information at our fingertips. And again, we're not predicting that the market is going to move to those levels. What we're saying is, if the market does move and shows us in its underlying action that that's what it wants to do, then what's the potential? What's the range potential? How much gasoline do you have in your car, and how far can you go on a gallon of gasoline, on a tank of gasoline? Right? So you have a specific range that your car can go before having to fill up. So in a sense, what's the average range What's the average rally that has occurred on a cycle day 2 when the cycle day 1 low has held, and then there is a bullish shift. So this was a pretty good day of how things can unfold under those type conditions. And then again, trying to demonstrate here what we look for with our other PTG indicators and strategies and setups, that now once we have that in place, the structure, well, how do I trigger into it? Is it just a matter of saying, okay, it held that cycle day 1 low and I'm just going to take a flyer and buy them? Not necessarily, although some people will do that, but rather I see that it's happened. There's evidence of that shifting to a more bullish condition. Now I can manage risk much easier, much better, much more confidently by waiting for the price on the lower time periods, execution periods even, for entering with a more acceptable risk parameter, and then just effectively staying in alignment with that new direction, or the direction on the bullish shift in this case, with the anticipation that, well, how far could it go? 25.19s, 25.20s is the potential. Why? Because that's been the historical average rally when these conditions have unfolded. Will it happen today individually? We have no idea. But now we become risk managers. We enter our trades on these pullbacks, and then we manage our trades. So how we would do that, we would scale out of some, get ourselves to a risk-free position as we like to get, and then let the market unfold. Right? As again, at that point, it becomes kind of a wash, rinse, repeat, scenario. As prices reached, the target zones, we no longer want to be interested in buying those. We want to buy them early in the shifts. We want to identify those shifts and get onto those opportunities, as we like to call them, as early as possible. Okay? That is our review for the cycle day 2 today. Really unfolded nicely. Now, again, going beyond this at this point, we don't really need to. Right? Again, the core concept of the cycle day 2 is to establish, cycle day 1 rather, would be to establish the low, retest that on a cycle day 2, which did occur, and that's a normal process. Market finds surety or security of that low, and then now the market can rally to the next objective. So from this, and that has all occurred this morning. From here, we're still on a cycle day 2. So the idea of still this backing and filling consolidation is still very much in play. All right, as you can see here in the profiles on the left, we do have some overlapping value zones. So I'm still anticipating into the afternoon session, cycle day 2 normal price action would mean some potential, backing and filling, maybe pulling back down into the mid area zone, all right, and just kind of consolidating. Again, we still have, the fairly aggressive move from yesterday. Prices have basically bounced back up, and now we could just find, once again, some sort of a balancing action, which would be normal again for a cycle day 2. All right, so that is going to conclude the review session officially, and I can take some questions offline, but I wanted to make sure that's set up, and we'll have this recorded, and we'll have it rendered and sent out to everybody so they can review it. All right, the market gives us some terrific examples. Once we know the template, we can apply the template in real conditions and with greater confidence and understanding how the market may unfold. Again, we don't use it as predictive capabilities, but in many cases the markets know what the ranges are. And one of the basic tenets that I've learned years ago is that the market wants to fulfill the range or satisfy the range. And in this case, we're talking about the 3-day cycle range. And as you've been observing over the past several days, these range targets get fulfilled, quite readily. So we'll just continue on review when necessary, so we can get a greater understanding of the cycle, how it actually plays out, not just theoretically on paper, but in fact practically, in real life terms. All right, so we'll conclude here, and we'll have it rendered shortly.